This is London with Bitcoin Spike. Exciting price action in the last 24 hours. Very exciting. Want to shout out to the VIP, our top level of membership. Huge trades today were had by VIP. A lot of huge trades. Multiple quadruple digit trades. We're going to discuss the pattern formation in play. I want to shout out, guys, to all the day traders. We hope you're doing well. If you're getting hurt by the market, then you need to focus on your TA. You need to buy at support, sell at resistance, trade your patterns, and hit your targets. Okay, this is London, former hedge fund owner, private, non-SEC, etc. Guys, not financial advice, but we are going to dig into the details and roll up our sleeves on the technicals. So the $20,000 range was capitulated. Our traders caught it. You guys did great. Congratulations. Incredible trades. That's all I can say for the lot of the VIP. Way to go. It's one of those phenomenal days where if you caught it, it was a great day. If you didn't catch it, it was a very uncomfortable day. I believe the majority, if not, guys, all the VIP in the back trading, the ones I saw trading, caught it. Congratulations to Bill, Freddie, Anthony, Sean. I think you caught some of it. Some other traders, I'm not sure. Venus in the back, I'm not sure if you caught it. What's going on, guys? Hey there. Hope you guys are doing well. We look forward to you joining VIP. It's crucial, guys, in terms of what you're doing, what you're trading. I see you chat there. Thanks for shouting out very quickly. I appreciate that. We spoke last night. If you guys were around last night, I want to discuss this. It was extremely important. It was very unpopular. Let me say this first and foremost. It was very unpopular that I would sit and I would say this, and I watched people leave the room every time I say it. And guys, I'm not all about being popular. You have to understand that. When we talk about last night, level of resistance, level of support, and trying to come down into this zone, I said that for, an hour and a half, 2 hours last night, however long the stream was, trying to get down to this zone. As soon as I said this in terms of the daily chart, everyone would start leaving the room. And it was unbelievable for me continually to watch the audience, to watch the average trader that shows up. I don't want to say people are the average trader. However, I know that VIP stuck around. And it's interesting as people float back and forth between channels. When I was discussing this last night, and I was discussing going here, every time I discussed going here, a third to a half of the audience would leave the channel. Would absolutely leave. They didn't want to hear anything about it. They don't want to hear about a lower price. So it's very interesting as you guys show up and say, hey, what's up, shout out, is I spent an hour last night talking about trying to achieve price here. Then we had one of the most aggressive days we've had in a while. Guys, boom to the downside. So congratulations to all the VIP who traded. I know you guys did trade. And that is the ultimate goal. You need to understand why, again, to achieve a super trend, a bearish super trend would be phenomenal. Now, what are the hurdles for us to get there? And we'll talk about a potential reversal right now in terms of a potential reversal play. If we go to the lines, okay, the lines are going to be indicative of this specific channel to the downside, but a huge move, guys, and we all caught it. I caught it. I hit a hedge, guys, last night. If you don't know how to hedge, you guys, you kind of know what you're doing in crypto, but you kind of don't. If you don't know how to hedge, right? What was the hedge? I just want to talk about it. VIP, no, last night I DM'd in the back like I'm going into a heavy hedge. What is a hedge, guys? A hedge is literally right in here, me saying I need some volatility, expressed volatility on either side, okay, with a dual position, short and long. I need some volatility. I need this thing to move, let's say, more than 5%. I need this thing to move more than, let's say, right, more than, let's 3%. I need this thing to move. Boom. Profit. Bam. Nice trade. Guys, hedge. If you don't know what a hedge is, then you kind of know what you're doing in crypto. You may have been around for a while. It's like, no, I know what I'm doing. I know what I'm doing. If you don't know how to hedge, guys, then you kind of know what you're doing in crypto. That's just it. I'm going to tell you. I'm going to go ahead and tell you. And hedges have been phenomenally just successful. I'm going to say that, guys, bottom line. They've been successful. Level of resistance, level of support. Now, the 786, right? Don't turn a blind eye to the 786 or to the 75th. The 75th is an institutional. These are percent discounts. We have not hit either of them thus far. The GAN box. What is the GAN box? Well, if you're dealing with, guys, if you're dealing with, let's say, a money market mentality, okay, or let's say a fund hedge manager, let's say anything institutional. Freddie, nice to see you, brother. Last night's stream was epic. I'm glad that you enjoyed hearing about lower prices and then watching it fall to the floor. That was big, brother. That was big. And Freddie's VIP. What's up, brother? You don't mince words. You don't mess around, Freddie. You came to trade. That's what VIP is all about. Way to go, Freddie. He literally shows up. He knows he's going to be involved in the back. He's just a leader. He's nice. For anyone else who's trying to trade or this and that, I mean, look at Freddie, guys. He decides to do it. He does it. You know, it's none of this. It's no riffraff. So, looking at the 75th percentile, I encourage you to look at both of, let's say, the 75th and the 786, and to understand. As I set the box, I want to make sure the GAN box, and these are institutionally recognized levels, period. They're institutionally recognized, i.e., it's like a mutual fund mentality. It's an institutional, I'll say there's an institutionally recognized discount level in addition to the 786. Does it pollute the 786 and the classic Fibonacci's? A touch. It's not accommodating to those of you who want to just trade the Fibonacci's. It's not. But if you meet some of the guys who operate on either on the GAN box, you're going to have a 25%, a 33 and a third percent, a 50% guys, and then a 75%. Very institutionally driven. I'm bringing this up because we are close. We are extremely close to that level. We got extremely close to that level. And looking at this, I had, in addition to the charts in the back that we had talked about, I had set up the 75th for VIP in the back. We didn't quite hit it, guys. We got close. You got to say in the back we got close. $300 within $300 of that 75th percentile. So to the extent, I'm going to say this, to the extent that the market wants to view this as a potential, guys, a potential bottom, what would this rest on? It would have to rest on the notion that, well, they just got their 75th percent discount. They got like 74 whatnot. So we're 74% off. That 75th percentile is a big discount, that level, guys. It's crucial. Now, the 786, just to mind you, is an additional over 15% to the downside. So understand, look at the dynamics of the market. Look at how psychologically it's difficult for the traders. When you look at a 75% discount, all right, a 75% discount versus a 78.6% discount, understand the difference between the 75th percent discount and the 786% discount on the macro. What does that actually mean? That's a difference of 14 to 15% within that dynamic between the 786 and the, look at this, guys, and I'll explain why. If you don't understand why that is, what the point is this: we had price from 0 to 69,000. Okay, we had price from 0 to 69,000. Period. Now, the point I'm making is the following. Please pay attention, because capital is at risk in these lower levels. Let me explain why somewhat mathematically without getting too complicated. But as you're looking at the entirety of the retracement, please understand you've got from 0 to 69,000. So when you're talking about 75% of a discount, you're talking of 75% of a discount of the entire price action from 0 to 69,000. Okay, so it's an additional, let's say 2 to 3%, 75 to 786. Okay, that's an additional, let's say 3%. It's going to be 3 point to be exact. I don't want to get into math, but additional 3.6%. 75th, the institutionally recognized 75th percent discount, and the 786. Boom. So we're going to stack on 3. Let's just say 3, guys. 3.6. We'll stack on 3. Boom. Percent. So, well, that's only 3%. You think of that. As you look at your Fibonacci's, it can be completely misleading if you don't understand the principle in play. And the principle is the following. Of the entire move, 0 to 69,000, of the entire move, an additional 3% of this entire move, guys. So if we were to go from 786 to the next level down, the 86, understand, guys, if we're looking at the difference, let's just ballpark that and call this, we'll just call this 10. Just call it 10. You're looking at a ballpark 8% discount from 786 to 86. You know, that's not much, right? You say, well, that's not much. I can tolerate that. I'll go ahead and just enter in the 786. But understand, it's the percentage discount of the entire move here. Now, if you're just looking at the move from here to here where price is right now, we have a much bigger, let's say a much different discussion. Let's put aside the entirety of the price action. Please pay attention, guys, please. Right? We're not looking at as the entirety of the Fibonacci's work themselves out. We say, well, we're at the 61.5 to the, let's just say 61.8 to the 65th, the golden pocket, right? Let's say the golden pocket. What we're looking at golden pocket is, well, we need 61.8 to 65% of a discount of the entire from 0 to 69,000. Okay, you're working with the entirety of the price action. Okay, but if we were to say, actually, let's look at the difference. I mean, it's not much of a difference. You would agree from the golden pocket to the 786, right? I mean, you're looking at a figure, and this is what it'll do, guys. Look at this. You're looking at a figure. This is the point. From the golden pocket to the 786, and you're looking at adding, well, that's like a 10% discount. That's not much, right? Because it's 61.8 to the 786. Right, 61 to 786. That's say 10, 15% discount. Not a big deal. However, when you measure it from the golden pocket to the 786, whoa, that's 44%. Do you guys get this? It's 44%. Why is that? Because you're not dealing with the discount necessarily as you would enter into this zone. This is how critical your capital entries are right now. You understand, on the entirety of the price action, sure, you're looking at another, let's just ballpark 10%. Just say 10% of the whole of the entire price action here. Sure, no problem. From 0 to 69,000, that huge bulk of price. But you're only dealing, if you were to enter at the golden pocket here, boom, with an amount of capital. Okay, and I'm bringing this up for a particular reason because you need to be careful on your entries. This specific golden pocket, if you were to stack, let's say it looks very simple because it's the 61.8 to the 65th or the 786. Let's say that specific move looks like about a 10% move, doesn't it? Well, I mean, it's the 65th or the 786. It's just not. It doesn't look as severe as 40%. Looking at the 786 to the 86, guys, look at the 786 to the 86. I mean, it looks like about a 10% move. It's 35%. So, and I had some discussions today, guys, and I don't want to mention names. I don't want to get into their specifics, their calculations, anything else, but some heavy bankers that literally have gotten chewed up recently, guys, in terms of their entries into the market. And you can be hurt, guys. You can be hurt. You guys know this. And Venus saying not trading until 100 rounds. Well, you can trade. Just understand if you're going heavier on the capital. Just, I promise you, this specific equation works out well. I tell you guys this all the time. We have talked about this, but heavier cash reserves at the lower levels. And where are we right now? We're right here. And in terms of a cash exposure position, guys, in terms of cash exposure, now we've been trading. That's been fantastic. We have been, guys, booking trades. And guys, some VIP are trading relatively heavily. I'm going to say not heavy, guys, not 7-8 figure positions like all the time, but relatively heavy, guys, so that you know that. But the capital exposure equation works like this. Okay, current price here, boom. We have some exposure. Great. If you're looking at accumulation long term, always ready, guys. Always ready to double and triple down. Increase your cash exposure at lower levels. Give it the opportunity to get down and really impress you. So I just want to bring that up because, you know, as you look at the figures on the Fibonacci, it just looks so simple. I mean, from 50% to 61.8, well, that's 10%. That's no big deal. That's just a 10% move. No, guys, that's a 24 to 25% move as you get into the specific Fibonacci's. Do the percentage. Do that for yourself. Do it on your desktop. Look at the difference in the percentages and realize you're making an entry, boom, of this. So really, and this is what's just crucially important for you to understand, you're making the entry not of the entirety here, right? If you had made the entry at the top, right? If you had made the entry at the top, then sure, you'd only be looking at another 10%, essentially a 10% drop of your capital. However, when you're making the entry, this is what makes your targets critical, guys. Your entries critical. When you're making the entry, boom, in the golden pocket, and you were to look at this, and bam, down to the next level, and it's, I mean, so, you know, from the 61.8 to the 78.6. Okay, let's say from 65 to 78 ballpark. Just say 10, guys. But looking at that, that's up to golden pocket down to that level is up to 46%. You guys get that? It's over 40%. So that's a crucially important issue to understand as you enter at lower prices. Your specific capital structure is heavier, I'd say more at risk than what your Fibonacci levels will present to you, right? Don't get caught up in this. If you're drawing your Fibonacci's low to high and you see this and like, well, that's the 61.8, that's the 7.86. Okay, so the difference between the 61.8 and the 7.86, or let's say 65th and the 78, let's say that's about 10. Or the difference between the 7.86 and the 86, right? Let's see if I added 10 onto 7.8, that'd be 88. So it's under 10 here. So about a 10% difference. No, guys, look at this. From the 7.86 to the 86, that's a 34% difference. That's a big deal. You guys understand that it's a big deal to measure between your Fibonacci's and realize you're not regarding the entirety of the price action. You don't have the benefit of that mathematical equation. I'm telling you that. You're entering with this degree from 0 to the 7.86. So a capitulation, guys, of just as we're measuring the drop of, if you were to enter at the 7.86, just to pay attention and make sure we cover this, guys, if it were to go down to the 86, you're looking at an additional drop of 36% of your capital. So it's a big deal, guys. It's a very big deal. I wanted to cover that tonight. And the exact mathematical figures, we'll go over those features if required. But I wanted you to have that exposure in terms of, psychologically, the presentation it's real simple. It's about a 23.6, then it's about a 10% move, a 10% move. Let's say a 10% move, it just is, guys. It's 25. It's essentially 23.6, the 38.2, about 10% move. So 32 is about 40, so about a 10% move, right, to the 50. Then to the 50% to the 61.8, that's about a 10% move, right? Then we go from that, the 61 to 78.6, a little bit bigger, but yeah, it's structured like that to where you're thinking that your entry is only subject to a loss of, let's say, 10, 20%, something like that. Let's say 10. But some of these moves in here are literally, guys, with enough capital that can hurt, guys. If you're looking at a 30% drop, or you're looking at, let's say, from the golden pocket to the 7.86, you're looking at a 44% drop. Big deal. No Torque brought that up in the back today, that his position from higher above would have been capitulated at that level. And Torque, I want to shout out to you because you brought up a great point. We don't cover it a lot, and we really need to cover it. Not a lot of people want to hear that. A lot of people want to get into the mathematics of their investments. They just don't, right? They want to know right now, is it going up or down? And that's just the wrong approach. As you look at as we look at have we or could we establish a bottom? Now, there are some different, I'll say, it was nice to see BTC recover today. That was nice to see the recovery in yesterday's trading day. Nicely done. Not bad. What I'll say, let's bring over the daily line. Okay, the daily channel formation. I think that's the most crucial line formation we're going to look at in terms of this channel formation, in terms of the resistance to the support. Okay, let's look at that. We would appreciate hitting the 7.86. In terms of that, I don't think we're going to have a problem hitting the 7.86. That's me personally. That 14,881, I don't think we're going to have a problem hitting it. During the severe retracements previously, we've hit it, okay? I'm just going to say that. We've hit it previously during the severe retracements. If we glide along the 75th percent institutional level, it's going to be an anomaly. It just will, guys. If we almost hit 75th, now we can dance around between here and there. We would prefer it to get heavily down, just personal preference. If you guys did not trade in and make money yesterday, if you did not trade and make money, I'll just tell you, you missed out. It was not a FOMO style, well, what are you going to do? Life's over. But it was a good day. It was a real good day. Congratulations to anybody who may have hedged or who may have shorted. And guys, hedging is nice because you don't you're banking on volatility, right? You want that volatility. It's nice, guys. So we go through that in VIP. And if you're VIP and haven't gone through a hedge yet, make sure you DM me, please. Vlad, you come to mind. Vlad, I know you've been busy, man. I know it's summertime. You've been busy, but you come to mind. I'm sure that you know how to hedge, I'm certain of it. So with that said, brother, I'm just hoping your trades are rocking and rolling. We're thinking about you all the time in the back. I'm always like, I wonder what Vlad's doing. Anytime I mention Bollinger Bands, I'm like, I know I'm inferior to Vlad on this, but I will go through it anyway, guys. Vlad's a rock and roll star. He's a good man, and we want to see what you're driving and what you're trading, boss. We want to see it. So bring the heat in the back when you feel appropriate. So level of resistance to support. This pushes the notion of a fan beyond that which it needs to be pushed. You guys understand that? This level of resistance to support should have picked up in this area here, right? And we ran into a circumstance. I was researching. I was trying to find, guys, and I scour the New York Institute of Finance Earth just so that you guys know. And I'm like, all right, this was my problem. Like, what justification is there for a descending triangulation bottom? And there's really that does not work. I looked at it, I'm like, no, that is not even a slightly mentioned in the New York Institute of Finance is a descending triangle as a bottom. No, we're gonna need to set at least a double or a triple bottom. The more we pushed out into this, and Freddie located a curvature. Congratulations, Freddie. You located a curvature in the back. Guys, when BTC starts to curve around, pay attention. When you notice these patterns that you don't like, pay attention. And you guys know this, but when you'll get into, because BTC will love to, and it is just huge. And Freddie, you noticed that. I point that out in the back, and that was before. It's kind of a transitional move that you'll notice Bitcoin do. You guys, without a doubt, that was a big pickup, Freddie. Exciting that you caught that. But when you see BTC start to, and she gets kind of interesting along the lines of her levels of support, her levels of resistance, etc. Let me draw this out, and then I'll change the framework just a touch. How would I get into this? Really? There we go. Let me do this. Let me show you what she likes to do here, and you guys will agree. You're like, yeah, we've seen that. Okay, in terms of the feature, you'll start to see curvature, right? You'll start to see, well, we like straight lines, right? But this seems to kind of be sloping up and around and this and that. When you notice that, guys, a lot of times, and you guys at VIP will know, it's a directional shift. There's some sort of programming change. Matic is the only other coin that I ever saw do that, really, in the context of the crypto sphere. And I know a lot of those coins are down. I bet a lot of people are acquiring some really, really, really light levels, hopefully, of some of those coins, hoping they go lower. But I looked at Matic down to like 30 cents. There's some really, really highly touted coins that are just suffering with this crypto crash. So it's happened before, guys. What is Cardano? You guys know Cardano went to $1 plus, right, in 2018. Then went down to, what was it, like 5 cents again? 5 cents, then went back to $3 here recently. So some of these are inexpensive. They've already been expensive, gone to like 3 cents, 5 cents. Look at the data on Cardano, okay? Between 2018 and during that crash, Cardano went to like 3 cents. So, yeah, it's been to $3. And it's just crucial, guys, in terms of your levels of exposure. When you trade, guys, you don't need to be on the annual yield bus. You just don't, guys. You really don't. I sat down with a pro trader today. He's a buddy of mine. He works out at the gym. He's a big guy, former, kind of semi-pro basketball player. Big dude. He trades Forex full-time. Yeah, it's nice to sit with him. He doesn't know what is holding. It's like, do what? It's not that's not the routine. He makes money trading. He can make 30, 40 G's a day. He's a good guy. And you guys need to know, like, when you trade, you can outdo your hold. I'm just going to tell you guys, especially with this level of volatility. Now, some of your trades will last longer, but with VIP, I got to tell you guys, how many people had, and when you say 1,000% profit, that's one thing. But guys, that's a 10x. That's a 10x. That's a 1 to 10 reward ratio. Okay, a 1 to 10. When you say a 2,000% return, that's a 1 to 20 reward ratio. That's a big deal. guys. So as you structure in those specific trades, etc., just guys, I encourage you to continue to trade. Just continue to trade. We're looking at a descending triangle, or and I call them descending triangle within the scope of a descending wedge. Now the framework is, I would personally like to see a bit more patterning before we would call anything a bottom. Okay, looking at the Nasdaq, I'm going to look at the Nasdaq now. Anyone who wants to focus you on something like an S&P, okay, an S&P 500, I'm going to tell you guys, the S&P 500 is not the technology sector. It is not the technology sector. The Nasdaq is the technology sector. So to the extent that we have a correlation with Bitcoin, we're going to be talking always about the Nasdaq. Like that's very commonly known in the States. You guys know this. Level of resistance, level of support. So this is where we find ourselves in this dynamic of being along this level of support on the NASDAQ. Very important, okay? And it's just a tenuous time. Equities are not favored. You know this. The nightmare scenario for the NASDAQ, and VIP know we've been covering this frequently with Bitcoin, would be a capitulation below this specific wedge. If we get an opportunity to watch, would be beautiful, guys. I would love the opportunity to watch the following. I want to see, me personally, just my own, guys, what I want to see. I want to see us be able to target that on the upside. I want the entire market to experience the dynamic that we have been doing in the VIP. I want us to see an opportunity. And for the NASDAQ, that's going to be a low push. That's going to just understand, as we talk about equities, we have to discuss them somewhat. But that's going to require a push beyond the high back in. It's going to be below the high, really, but beyond that high, this specific lateral, as we look at this horizontal structure here at this 9,700, we're going to need to get under that to recapture this specific apex. If you haven't seen the wedge tactics, Bitcoin spike wedge tactics, please pay attention to that. But I would like you all to see that dynamic play out, and for institutional Wall Street to maybe pay attention to that technique a little bit. So it's going to have to get down there. We're going to have to get some more bad news, some more restriction, maybe some constriction in the market, some more recession. Some more recession. We're going to have to see that. I don't know. Comfortable week in the market would be nice, though, wouldn't it, guys? A little bit of a comfortable week with a little bit of green all over the screen would be nice, huh? Just real ultimate, real legitimate green. Well, you keep saying it kind of feels like that, but the weeks have just been down. Let's do this again. Let's look at the weeks. Let's look at the weeks on Bitcoin. Let's just do that. Let's let the equities reflect the equities, and let's get into the weeks on Bitcoin. Let's look at this. So I will mark the 786. I will mark the 75th. Those are institutional levels, guys. The 75th at least, and that golden pocket above, but the 786 below the golden pocket. These are just incoming, right? Incoming. We're going to have to dig down to the 86 really to get out of this structural framework. As you look at like 9,000. You guys have the feature in the back in terms of that price target at 9,700, something along the lines of that. We would have to get down to that to really establish a super trend for the bears. Hugely important. And people, I just tell you this, people are pro traders. Guys, you'd be surprised how frequently I sit with someone who's a professional trader, and you all can outdo them in terms of your target strategies. I'm telling you guys, in terms of the basics, New York Institute of Finance, etc., I will sit down with some guys, and it's not that they can't trade or make money. They can do that. But in terms of the flow of the conversation, in terms of being able to defend themselves, it's a different deal, guys. You are very well equipped. You need to understand that. You're extremely well equipped for the market. You guys are doing very well. I'm going to tell you guys that. I spend time with some different people, just they're around, right? You guys meet them too, just day traders, etc. You see the difference between VIP and otherwise. So digging into the framework here, and I'm really looking forward to you guys being able to explore hedges, right? Just what is a hedge? Like last night I told VIP in this zone here, boom, I was getting into a heavy hedge. Yeah, you guys know that, right? I was getting into a heavy hedge trade here, right? And what happened? Boom, we got 14% move to the downside. That is a hedge dream. That is a hedge dream. That level of volatility works every time. What's difficult is if we have a lot of carving like this, some trappy carving like that. But give me a nice pattern that I can break out of, park a hedge for a surprise to the upside, okay, I'm covered, or boom, to the downside, it is a hedge dream. Very exciting, guys, in terms of that. And I trust that you guys are developing your trade game as need be. And guys, we're going to get through. We've made it this far. The good news is you guys are going to make it past. You're going to make it. Back to whenever the new highs are arising, right? You guys are going to make it. That's just going to be it in terms of in terms of everyone's like new high, huh? We're looking for the low. We're looking for a lower low. I know that, and you guys want to short into it after that level of volatility we had. But 14% to the downside, guys, is a big dig and a big recoup, huge recoup. This is going to be a wedge we're going to look at. But the recoup here, and congrats to the guys who entered in the back, because making hundreds of percents on this 10% move to the upside, just huge, just nicely done. Like, we'll take this all the time. Another big VIP weekend, bottom line. Bottom line. And when people show up and like, is it going up or is it going down? I got to tell you guys, let it go the direction she wants to go. We're going to trade it is the bottom line. Like, can you catch a breakout? Come on. It's like it's just kind of admitting you can't trade. It's like you can't catch a breakout. You don't want to trade a pattern. It's like we're mid-pattern, man. You want me to tell you where it's going right now? It's like, we're just gonna. I don't know, guys. We're better traders than that. Buy it, support, sell it, resistance, trade your patterns, hit your targets. You guys know this. So in terms of additional price action within the specific wedge, we need to be prepared that we're in a bullish structure right now. Technically speaking, we're along the golden pocket, hugely important. Okay, from the low to the high measured, we're on the golden pocket. It's a nice pickup. The first pickup on the golden pocket was important. Looking at that 2.7% plus, we're on a secondary hit. From the 65th first hit to the 61.8 on the second hit. We have the 786, we have the 86, and we have the 1 below. Torque, I want to shout out to you. No Torque VIP for a long time. He's just he's a great guy, and he listens. He knows what he's doing, and he's just his target levels are very good. His aptitude in the market is he's proficient in terms of markets, guys. He just is. I'm going to say that in terms of the crypto market and BTC, and it's nice to see you continually hit your targets, Torque. And in terms of this specific structure here, I would have liked to have gotten up over here, me personally. VIP, I told you I'm getting into a heavy hedge. In terms of dissemination of information or letting people not in our group kind of, privy to our trades or whatnot beforehand, I'm just not all about that, guys. I want the VIP to know what's going on. So when I told you guys in the back room last night I'm getting into a heavy hedge, if you got into a heavy hedge along with me, congratulations, because that was a big day, guys. That was a big move. You guys know for that for 14% to get stacked on, boom, that was some money, guys. That was some money. Way to go. And that's VIP. And so I'm happy last night to have reserved a bit of a directional forecast or projection and just have shared that in the back. Hugely important for the VIP who hit that. That was sweet, guys. That was a good day. That's a memorable day. Way to go, guys. So in terms of any of the surprises that we have, I'm going to say this. We have a level of support clearly indicated. Glad that we identified the channel framework as well early, right, in terms of that YouTube, just the update, guys, on that 4 hourly. And we breached it a bit. You guys know that. We did breach down into it. But if you go to the candle wicks, we have a relatively nice line of support here. Relatively nice if we go to the candle wicks, okay? We're almost right along that line, but we've carved into that support just enough, guys, just enough on that level of support, but a key focal to pick up on super early. You guys know that. In terms of that, and I saw it, I'm like, this is what she's doing, right? Because we had this specific framework early on. I brought that to you guys early on in terms of that specific pickup zone. And certainly, when we saw the micro, what was that? The micro ascending triangulation. And shout out to Venus. What's up, Venus? I see you in the chat. Shout out to Freddie. Shout out. What's up? Thank you guys for chatting a bit. Anyone else who's not VIP, what's up, guys? Just join VIP, get in a trade group. But if you can't, I understand you can't. Maybe you don't. I don't know, for whatever reason. That's your deal. We got our own deal. So looking at this specific microstructure, I let a short go here. And I just tell you guys, in this zone, I let a short go. It was a quadruple digit. It was 1,000 plus, 1,150 or something like that. It was a nice trade. In addition to the hedge, guys, hedge I let go earlier. It was just significant enough trade. I let it go. and I wanted to lock that in. But I saw this, boom, boom, boom. I saw this, and I was like, it has enough of a slant to it. I'm liking this, and it just looked like it wanted to project back up over this level of preceding resistance that I'd shared with the VIP in the back. So I did cut loose of a nice short in this area that was 1,000% plus. Various VIP are still in a short. Hey, I don't blame you. If you guys are in a very strong short and you want to get, some of you guys are going for a record, right, in terms of your trades, and it means a lot to you and to us, everything else. I appreciate you guys doing that. The time frames are going to walk this level of support up on the lines. Make sure that you look at that 4 hourly. 4 hourly on the candle wicks is a big, important time frame. The expression here is technically bullish. Bottom line. On the lines, the expression is bullish with the following caveat. Guys, let's look at the, and one thing we can do, this is probably the most simple thing to uncloud the entirety of this move here. What are we looking at? If we look at a triangulation with an amplitude move, let's look at that amplitude move. Let's carry the amplitude move up. We're just about within that zone in terms of the amplitude move to the upside. We may still have some room. If I tighten up my lines here, however, let's really tighten the lines up on this top level. And I know you guys have looked at this, but we'll just review it. Right, we're close within the threshold in terms of this. It would be the bottom line move, right? If we tighten this up, you know, we had the variable level of support along the bottom, and by that I mean we had this internal level of support. We had this specific level here, this pivot here. You guys know that. So the notion was, and it was nice to get down and out quickly because normally we'll see, I'll say, you guys know this, normally we'll see BTC pick up here, right at the preceding low. We just do so frequently. So that was just like a big reward for anyone who took decisive action on the descending triangulation. The 4 hourly has been, it's been looking decent, hasn't it? It's been looking relatively bullish. That larger time frame has been trumped by the lower time frames. No problem. We roll. Like, given that, I'd say level of lack of confirmation is really what we had. On the lower time frames, we had the descending triangulation, okay? And again, measuring that amplitude move to the downside, boom, that was a clean move, clean target hit, right? Beautifully well done, along with that level of support. So that was a nice way to exit that specific trade. If you guys traded that heavily, congratulations. Nice basic TA moves. You guys know that, along with that level of support that we had come in contact with. So from here, we're really reestablishing a bit in terms of the framework of the overall pattern. The market is assessing right now, and it's you, it's me, it's everybody in the market. We're assessing that we're off of that lower 786. You guys know that. We're off of that level, and that from here to there would be an additional 20% down, about another $3,654 down. So 20% down. Well, you guys, it's 20%. As we get further down in price, realize the following, that the incremental moves that we have been used to are going to provide us with better trading opportunities. I've been saying this the entirety of the time. I want you guys to realize why I've been saying it. Like, we just had a gangbuster day, 14%. That's what we're talking about. Look at this move up at the top, this specific drop here at the top. Make sure this is on a big screen if you can. Get a big screen. Throw it on a big screen TV. This specific move at the top, look at that threshold. Let's drop this same move down to the bottom. Now, at the top, the drop on, let's say, this measured move at the top, boom, is going to be $1,100 and 16.64%. Okay, great. Okay, 16%. Now, the same $1,100 down here is going to be, guys, 54%. And actually, it's 11,000. I need to squint at this. My apologies. I'm like, that's a little bit big for 1,100 at the top. That's my fault, guys. Let me get closer to my monitor. I have it zoomed out so you guys can see it. Looking at this, if we're looking at $11,000, this is my fault. Let's just say 10,000 from this top. I'm looking at it like, that's not right. So it's at 10,000. Let's say at 10,000 from the top. Let's prove the point. What's the point we're getting to? And please refocus. $1 on $1 is worth a lot more than $1 on $100. Okay, so when we're dealing with price moves, amplitude move, the same amplitude move, top and bottom, boom, and this is 1,000. The same would work with the 1,100, but the let's say the 10,000, a $10,000 move, about 15% on top. Okay, the same 10,000 move, guys, is going to be about 50% here. The point is this, guys. the point is this: as we get into the expression of BTC, she likes to do her scheduled moves. This is the point. Please pay attention. Sorry for that error. Of course, it's not but it still applies, whether or not it's 1100, whether or not it's 11,000. Guys, it's going to be the same. Every dollar that's closer to a single dollar is going to be worth more to you trading than it is at a higher figure, at $69,000, $70,000. And guys, as we were to continue to get lower, the trading conditions should improve in terms of the levels of volatility if we can continue to maintain the same degrees of structured moves. Now, this is pertinent immediately right now because we're in a preceding level. Taking a look at this preceding level of resistance at 20,000. You'll see this was one of the key focals in 2000 and 2020 to 21 when, boom, we launched to the upside. You know, this move got you, and this is the point, this move got you 128%. You went up 22 grand, 128%, right? Well, essentially the same move as you look at another 20 some odd, let's just measure this exactly. If we're going up $22,000, let's go up another $22,000 on the second level. 100+% becomes 72%. That's not so good, guys, right? I mean, she had to push that much, just as hard, and you only got 72%. Preceding zone, you got almost twice that, right? You got almost 140% versus 70 some odd percent. That's not good. We don't want that, right? So when you get lower, the same move in price from a higher level is going to have a more dramatic effect, guys, and that's going to work on both ways, guys. It's going to be a little bit more aggressive towards you as you would trade, as you would enter into a position. If it goes against you, guys, be prepared for that. It's that derivative gain analysis, GAIN, as I talk about the gain, right? If Bitcoin likes to move this much, right? If she likes to have moves, let's just say she likes to tack on another 8,000 to 9,000 consistently. She just does, right? You will see a day where she tacks on $8,000 or $9,000, or a few days $8,000 or $9,000. That's 23%. If we take that same move down here, and let's say Bitcoin wants to tack on $8,000 or $9,000, crucially important, guys, $8,000 or $9,000 here. Well, okay, now we're looking at 56%. It's a big deal, guys. That's a big deal. Going to 56% from, let's say, guys, you're doubling from this level down. You're doubling the impact in terms of the percentage gain. Okay, you're doubling the impact in terms of the percentage gain just by getting to a lower level, just by getting to a lower price. So that's one of the benefits as you get lower. And regard that also. Just regard that, because the moves are to the upside and to the downside. As you look at a derivative gain, we're bringing the preceding, guys, the preceding behavior, pricing behavior of BTC. And I've done this frequently. You guys, you'll understand this one. I've done this so frequently as we would ever look at a bull flag formation on Bitcoin, as we would look at that repeat function over in this zone. Boom. You just see this, guys. It just is expressed behavior of the coin. It's pattern behavior of the coin. So as we would look and delve into, and let me get rid of the GAN box just for a minute. Let me get rid of the of some of these issues so that you can actually see this very clearly. But as we get into this, you see the pattern behavior of Bitcoin. Boom, boom, boom. Well, we're happy to go lower, guys. We are happy to go lower and get into a restructuring that's a bullish framework. Because down here, this is worth 140%. Above, it's worth 70, right? So that's the dynamic we're getting into in terms of the moves being more crucial, more costly, and more potentially profitable. Just mind that. And I know it's kind of late, guys. I wasn't necessarily going to stream, but I'm like, we got to stream. We got to get together. So I know it's a little bit late. I know you guys are probably trading. It's been a long day for me. Hope you guys are doing well. But we'll just talk about the benefit of being lower is, boom, a move like this. We got down 14%. That's a big day, guys. We'll take days like that every day. Just enjoy this being at lower levels right now, 18.5. Just enjoy that, because this is a dynamic that doesn't necessarily play out at the higher levels. Your ETF funds, right? That are trading, your ETFs that are trading BTC, your leverage, etc. They're loving the lower prices. And when you talk to normal people, guys, on the street retail, they're gonna tell you all the time, well, Wall Street's trading this. They want to trade a more expensively priced Bitcoin, don't they? Don't they? Like, no, man, you got it all wrong. No, 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 no. And I don't say it like that ever, but you have to understand. No, anyone trading an ETF, anyone trading on leverage at all, options, anything on Bitcoin, they want this 10,000 move, this $10,000 move to be down here. I'm telling you guys, they want that $10,000 move to be down here and make the difference, okay? If they're shorting, for instance, if they're shorting or longing, looking at this move from the top side, $10,000, that's 15%. 15%. Well, that's a decent trade, right? 15% on leverage, etc. Same $10,000 move below. Well, now we're looking at from, depending upon where you say, let's say from 30 G's. Well, we're looking at 36%. Instead of, we're doubling, and guys, more than that, depending upon how low we are. But that same $10,000 means a lot more. So yeah, the street, the traders, people trading, guys, not holding, not selling to clients necessarily what it may be on the street, but what I was on Wall Street. But yeah, the traders, the people with the ETF access, the control computers, those trade stations, we want more volatility, right? We got to have it. So I'm excited that we're in that zone. That's a good thing. We talked about the difference on the Fibonacci's. Just lay those out on your screen, please, and make sure you've measured between the golden pocket down to the 786, down to that 86. There's a lot of loss potentially in these zones. It doesn't seem like it, right, in terms of this, because we're already so low. It's 18,000. Like, how much lower can it go? The good news is this. You guys have preserved your heavy capital, right, for lower levels. I just don't want to see your heavy capital go down by 46% to 9,840 and for it to be a difficult year for you. I don't want it to be a difficult year for anybody here who decides to go ahead and say 18, I'm just going to hammer into it. Now, in terms of missing any opportunity, if you trade, you're not going to miss it. You're just not going to miss it. If you're going through your 100 rounds like VIPR, you guys are doing great on that, by the way, and you're on a pathway. I want to let you know the pathway is the following. First, book a 100% trade. Second, book a 200% trade. Third, book a 500% trade. Okay, that's number 3. Then, fourth, I want you to book a 1,000% trade. Now, let's review this. This is the most impressive metric, as I've stumbled through a few things on the stream. I don't know. I took a power nap. I normally don't get up and do mathematics when I take a power nap. Noted, guys, noted. I just don't. Look at this one. This is a 10x here. We're going to count this up. This is the most important metric. 10x to the upside, 1. And look at this, guys. 10x, that's over 10% to the downside. That's 2, meaning that would have been a 10 times your money move, period, on 125x. That's what we trade. So that's 1, 2, 10x's you could have had in Bitcoin. Look at this specific move back to the upside. That would be 3. That's 13.8%. Looking at this move down here, boom, 11.27%. That's 4 that we're on. 4. Looking at this move, yes, that would be, guys, 5. Okay, we're looking at this 5, 10x's on Bitcoin. Looking at this opportunities and looking at this back to the upside, that's 6, 10x's. 6, 10x's in what amount of time? Look at this, guys. This is not hype. This is the truth. If you're trading in 5 days and 5 hours, Bitcoin has produced 6 different opportunities for you to get a 10x, guys. More than that. I'll say more than just a 10x, but that is what Bitcoin is offering you to trade. Guys, that's phenomenal. You realize people hunt back and forth for altcoins all year long, and I got to get the right one. Guys, this is 6 opportunities in 5 days and 5 hours to hit a 10x. That is huge. That is what it's all about, guys. That's Bitcoin. So in terms of that, I'll just let you know, that's the most exciting metric that we have thrown together in a while. Irrespective of maybe the fear or the panic, whatever it is, we're not feeling any of that, guys. You guys are rocking and rolling. We want a piece of this action as much as we can get it. I'll let you guys know you're just rocking and rolling. It's good to have you in VIP. And 6 10x's, 6 10x possibilities. Not that you could trade with 10 times your money. I'm not talking about that, guys. Your leverage. No, I'm talking about your return on at least 100x. We trade 125x on LBank. Understand, guys, for the 100 rounds, understand that pathway that you're on. 100% trade, yes. A 200% trade, yes. You get your 500% trade next, yeah. Then you get your 1000% trade. Boom. That's the pathway. I want you guys to be able to see that, yes, I can book a 10x. I know it's standard pricing. Price is moving 10%, less than that, guys, in terms of that 125x that you're trading on. But I want you to work on those levels of precision. I want you to see that, guys, it's such a big reward ratio, that 1 to 10 reward ratio. And at some point that may adjust how you look at your approach in the market. You may have a bit more tolerance at some point, guys. For right now, I want you to get to, and I keep saying this, I want you to say to me, London, I can book 4 positive trades any day I want to. That's job number 1. You got to get to that point. In the context of 6, literally just measured 6 opportunities to book a 10x. It's almost unbelievable, guys. It's the only thing really to talk about. To tell you the truth, honestly, almost, guys, it's almost the only thing to talk about in terms of 6 10x's. So in terms of additional price action, the wedge is a bullish feature. I will state that. We're going to need that NASDAQ to pick up on support. And looking at the NASDAQ now, if we were just to pull up the framework of the technology sector of, guys, essentially the U.S. markets, looking at that constriction, we're in a, to look at this, we have already fallen out of 1. And this is important because you're seeing the dynamics that we put in play. This is a different chart I wanted to bring up. In terms of the specifics here, this specific descending wedge towards the top, then this second level wedge here. If BTC really is correlated with anything, it should be that technology sector, should be the NASDAQ, okay? To the extent that we are in for another round to the downside and a third level, okay, to the extent that the NASDAQ is in for a third level to the downside, it's really unbelievable the degree of power that the bears are exhibiting, that the sellers are exhibiting in the market. To the extent that the sellers, quote unquote, are the Federal Reserve, okay, and they're shedding their balance sheet, this kind of move is really unavoidable. If they are literally clearing their balance sheet, right, they're clearing their holdings, okay, this type of a move, it's quote unquote sellers in the market. No, it's big time cash going out of the market, right? Not necessarily a buyer or a seller, this and that. They're technically selling, but they're exiting positions. So that the triple level push down descending wedge is indicative for us. And what we would like is upside targets. So I'll say this right now, we are going to continue to trade. I don't want to forecast. I may hedge. If I'm in a level of uncertainty, I like hedge. If I'm in a position where I can expect some real volatility, boom, boom, right? She had been producing relatively decently to the upside. You guys know this on the descending triangulation. She had been getting up and out and trapping some people, and this move to the downside was just killer. I'm really excited about you guys in terms of your trades, and let me know what you're trading, what you guys are doing. What's the next trade on the books? I know, Anthony, you're in that 2,000% short, nice short. Looking at this with this 6 10x opportunities, 6 1,000% trades in the last 5 days. You see that Anthony has gone beyond the last number of days, really, within, he's encompassed multiple of those. So maybe a little bit more chill. Maybe that's his schedule. Maybe he's just been VIP for a while, and that's what he chooses to do. Anthony, my man, what's up? Nicely done. And those are returns, guys. If you're not trading with VIP, you can make those returns. We just encourage you to go through 100 rounds. Make sure before you're really heavily exposed on capital. And some of the VIP are trading heavily, guys. I'm gonna tell you guys, it's not all light, $5 and $10 trades all day long. No, guys, we got some VIPs that are punching through it hard and know what they're doing. Congratulations to those who are at that level to comfortably take care of the market, right? What are you going to do today? You're going to take care of the market. And how are you going to do? You're going to win, right? That's the bottom line. So, and you know how to do that. It's not a stressful situation for quite a few of you. So congratulations to those who are at that level in terms of the cash position and your profits. I have to say congratulations on your profits. And another technical bullish structure. If you guys are trading smaller features, just remember right now, the larger the pattern, the larger the expected move. You know that. The larger the pattern, the larger the expected move. So we had formulated a nice pattern here for a number of a few days in terms of that descending triangle, and on the 4 hourly, we had some. At least I say the channel formation is the most prominent feature now. But looking at 2 days, 22 hours, it took us to formulate this specific pattern. And guys, we're just going to be trading. That's it. And I just wanted to really reinforce for you this notion. Really, Torque brought it up. Torque, you brought it up. Congratulations. Torque's a VIP. It has been for a long time. Very valued VIP. But between the golden pocket and the 786, you know, it's only 65th percentile to the 786. That's a 65 to about 75. That's about 10% difference. No, guys, it's a 40% difference. Okay, because you're not dealing with the entirety of your price action from 0 to 69,000. You're not taking. You're not getting the benefit of that mathematic. You're getting the restriction of an entry at the golden pocket. Yeah, you're gonna lose, guys. You're gonna lose that amount from the 61/8 that golden pocket down. Let's see what we have here. So I just invite you guys to join VIP if you're not already VIP. Welcome to all the VIP, and we can go through this more solid mathematics on the Fibonacci's, etc. Each level, how it computes through, and that math exists. It is boring. We can go through it if you choose. We can go through and have a Fibonacci structured day, the percentages between each Fibonacci. We don't need to go there, guys. Just keep it simple, okay? We're in a bullish structure right now. You guys know that. You can measure out and calculate the percentage between each Fibonacci, and it lines up with the heavens and all. You can do that, guys. We don't have to do all that. Basic bottom line, hit your targets, right? We got that 786 below. A lot of orders on that 786. The majority of you guys, I won't say all, but the majority, guys, vast majority of all the altcoins have hit the 786, have hit the 86. So BTC is sitting here above like, grr, I don't want to hit the 786. Just touching the framework within a few $100s of that 75th that I brought up for the VIP today in the back, guys, within $400. Within literal 2%, right? Within a 2% move of hitting that 75th percent target, and we did catch on support. We caught that in the back. I'm excited that we caught this move in the back, that VIP traded it and are up several 100% on this move. That's impressive that you guys have booked positive trades there. It's just you're not going to get anything by the VIP. That's the bottom line. I'm going to let you guys go because it is late. I had taken a power nap. Honestly, the day just wiped it out of me. It just did. I got up early, like at 8 or 9 o'clock, been pushing all day long, and I just fell over. So apologies for that, but I had to just mentally just unwind for a bit. We're on the second hit of the golden pocket. I want to shout out to Venus and to Freddie, to everybody. Let's go. We're in a bullish structure now. Certainly we're in a bullish structure, right? Right? I was like, man, I don't know. What I'm going to tell you is this. As we constrict in here, it would be nice to see a hit on the 786. If you have orders parked there, join the stadium full parking lot, whatever your local, NFL football team is, that times magnitude of 100. All the cars parked at all, literally all the cars parked at all the football stadiums in the entire United States of America. All the cars at all the football stadiums literally have a level at 786. Okay, so if you decide to place your orders there, just understand you've got literally that dynamic at play at that 786. Okay, just think about things in terms of that. There's that level of demand at that 786. So a lot of action is parked below while she toys around with the traders a little bit and provides some excellent trade opportunities against 10Xs within 5 days. Possible to trade, and I encourage you guys to never be overexposed. The VIP way to be, and just wanted to come live for a minute and say hello. Hope you guys are doing well. This is London with Bitcoin Spike. Let's get in the back here and see if we can pop this wedge to the upside. I'm going to be trading with